Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we are taking a look at the short-term price action for Bitcoin, going over the recent volatility toward the downside and retest of the critical support at 80 to 81.5k. We are going to be discussing the macro implications of this retest, what this means for the immediate price action for Bitcoin, and how the broader markets are developing moving into some major economic news later today. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, you can join us on Telegram with the first link down below. That will get you access to our Telegram channel where we post daily updates, we post analysis, we have our videos, educational posts, and pretty much everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you are interested in taking your trading to the next level, you can join us in the VIP channel by clicking the pinned comments, click the admin contact details, or find our 50+ month trading track record or a 10-minute video showing you inside the channel. You'll get access to a variety of things, including access to the main VIP trading channel where we post trading setups with exact entries, targets, and stop losses, including access to a variety of group chats from the general chat to the trading chart and education chat, from the news, help, daily video, and community setup chat. Check it out. We have over 700 members and we'll see you in the channel. Let's go ahead and dive into the content. So following yesterday's tariffs news, we saw a whole bunch of volatility resulting in one of the most brutal 4-hour candles for essentially the last 30 days, dropping around about 7% in 4 hours, all the way from the $89,000 horizontal high, pretty close to that 80 to 81.5k low. Over the next couple hours, we did see Bitcoin continue that short-term trajectory toward the downside, finally retesting the low level of horizontal support at that 81.5k level. And since then, we have seen a short-term reaction toward the upside. In today's video, we are going to be discussing what this consolidation really means and how it impacts the higher timeframe charts, as well as diving into the immediate price action on the short term, discussing the next potential moves. We'll also be looking at charts such as the weekly chart for Bitcoin in relation to some key technical levels, such as our Gaussian channel, also going over the 3-day Gaussian channel, the horizontal levels on the RSI, and key and critical technical and structural levels on Bitcoin's macro charts. And finally, we'll be finishing up on the charts for both the altcoin and the total market cap. Let's go ahead and get stuck into the data. 24-hour volume is down 26%, still pretty high at 229 billion, with liquidations dropping 49% at 257 million, 174 million coming from longs and 82 million coming from shorts. Moving over to the broader markets, the DXY has nuked toward the downside, dropping underneath that 200 moving average. We can now expect the DXY to continue along this trajectory. We're looking for a move into these lows, and that is going to be expectation by the end of mid-year. Looking at the S&P 500, it has also continued aggressively toward the downside, yet again proving the fact that while we remain underneath that 5,800 level, we are expecting an eventual reach of our lower level of support at 5,300. If you have been following the channel, you would know for the S&P 500, we have been basically bearish ever since we retested that $6,000 region. As you would know, I'm going to show you a chart in a second. We turned bullish over here on the S&P 500 all the way back in around June 2023, and we were targeting $6,000 the entire time. Every day, every time we did a video, we were discussing the $6,000 macro target, and we reached $6,000 and we saw that exhaustion develop above. We ended up turning bearish, and we're bearish ever since. We are still expecting this bearish trajectory to continue for the S&P into these levels of high time frame support. These levels are going to be acting as potential reversal points. Now, here's the thing. For us to turn bullish again, we need to see two things. Number one, the price needs to break above 5,800, but most importantly, we need to see that momentum flip positive. Until we see that, it is more likely this downward trajectory will continue. We will see short-term periods of relief, but unless we start breaking through these trend lines and creating, again, positive momentum shifts and seeing some new higher lows print and potentially higher highs print, we are not going to see this trend reverse. At the moment, we are expecting for 5,300 still. So that is going to be our target. We're about $125 off. And since we have turned bearish, the price has dropped now around 10%. So fantastic prediction there. Fantastic call there. Let's move over to Bitcoin now, guys. Now, before we get into Bitcoin, make sure to hit the links down below. If you're interested in supporting yourself even further in your trading and supporting the channel, you can sign up to BitGet, BitUnix, or BingX. These are the exchange links down below. You get a lifetime trading fee discount of 15%. And that 15% discount can build up to 45% based on your trading volume. So check out the links. It takes a few seconds to create an account. You'll sign up using those links to get those discounts. You'll support yourself and support me. We'll play a quick ad and we'll jump back into it. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay guys, let's jump straight back into it. So starting on the short-term price action, we can of course see Bitcoin has now retested yet again that 80.815 level. Now, this level is of absolute significance, guys, in terms of our macro charts, as we have discussed before, essentially determining whether or not we see the price turn bullish or continue in this bearish macro trajectory. Let's start on the higher time frame charts, however. I want to talk about the 3-day chart first and foremost, specifically the 3-day Gaussian channel. Now, as we can see, we have a whole bunch of confluence lining up at this $89,000 region. First and foremost, we have got the $89,000 to $87,000 horizontal level of resistance. This is a daily level of resistance which we have now been under since the 27th of February, so over a full month, and a level of resistance we have failed to really break above here on the short term after numerous retests, particularly the 25th of March and most recently the 3rd of April. This is a daily level of resistance, but we are looking for a weekly close to sustain above here, because what we need to see here is not only a break above, but we need to see the momentum shift on the weekly chart. And for that to occur, we of course need to see the weekly downtrend, the RSI break. Now, this level is very, very important. And what we can also see with this level, we have a bunch of confluence. We have got our weekly downtrend in regards to the price action. We have got the 3-day 50 EMA crossing through that level, as well as the middle line of the Gaussian channel crossing through a level. So from a technical perspective, we have got a whole bunch of confluence sitting over here, acting essentially as a trigger point for that trend to shift. Essentially, while we sit above these, the overall expectation is going to be lower. If we are able to break above all of these levels, that is going to show adequate strength for a likely continuation upwards. And that is why this horizontal chart here, although seems quite insignificant, holds massive macro implications based on the direction of which we see the price break. As a consequence of breaking these levels, have profound technical impacts in regards to the overall relative strength on these higher time frame charts. So looking at the weekly chart now, we can see if we go to a weekly chart, we have got our weekly RSI downtrend very much still in play. Now with this weekly RSI downtrend, we can see we have a pattern developing. This pattern played out 2 prior times in the past, but doesn't necessarily mean it is going to play out again. What it does show us is this pattern isn't designed to predict the future immediately, but if we break upwards, we have an indication of what may occur based on historical data over here. So until we break upwards, we cannot predict this move to occur, but if we do break upwards, we then have an expectation based on what we have seen, and we can use that to infer what the price may do in the future. So upon the breakout of this level, we will get the break of the $89,000 level, we'll break the 50 EMA on the 3-day, and we'll break the Gaussian channel midline. We will have not only 3 points of confluence here, but we'll have a 4th point of confluence over here. This is going to provide significant shifts in probabilities for directional continuations upwards. But here's the kicker. Until that happens, the direction is downward. Until that happens, we are still expecting lower. And this is where it becomes very, very dangerous. If we do see that price action drop below 80,000 and we fail to sustain this critical level of support, we run the risk of dropping below the 44.62 on the RSI. And as we have been discussing now for numerous days, the break of the 42.62 on the RSI will not only indicate that the price at this particular period here is showing less strength in comparison to what we saw all the way back down here, indicating the prices from a momentum perspective overvalued, meaning it could correct back to these levels, but it would signify that the level of support in regards to momentum that we have been holding above essentially since when the bull market commenced. Now, the bull market didn't immediately start here, but this was essentially the point at which the bull market began to develop from. If you want to be specific, the bull market started above 32,000, but the uptrend, or should I say the overall macro downtrend, ended in January 2023, which you could classify as the start of the bull run. If we're looking at cyclical theory, if we're looking at the 4-year cycle, okay, which has been mostly disproven by now. But nevertheless, it is still a level of significance. If we look at that point, the RSI has been sitting above 44.62 ever since then. So we can almost assume this is going to be the bull market support level in terms of momentum. And therefore, if we do see the RSI drop below, that could spell disaster for the uptrend we have been in ever since that point. As the uptrend started over here and has been continuing, and the uptrend started over here and has been continuing as per the RSI, and therefore the loss of this level could indicate a leading sign that the uptrend we have been in since January 2023 may be coming to an end, and that could result in some major macro consequences. Consequence number 1, as we just showed you, would be a correction into that $55,000 level, which is going to be the 200 moving average and the sell side liquidity, and consequence number 2 will be a loss of the 50 EMA and the upper band of the Gaussian channel. And what we can see historically is when we see the upper band of the Gaussian channel lost after weekly bearish divergences, okay, weekly bearish divergences, okay, upper band of the Gaussian channel lost after that point, just like we saw in 2021, we entered macro downtrends that took us well underneath the lower band of the Gaussian channel. So we do run the risk of potentially, and I don't like to use this word lightly, and I don't want to, apply too much significance to it yet, but we may potentially run the risk of entering what you could classify a higher time frame downtrend, whether you want to define it as a bear market. That is up to you. Now, I guess a lot of people have a lot of connotation attached to the word bull market and bear market, but they perceive the word bull market to bear market under the lens of the 4-year cycle. But if we're just looking at the traditional sense of the bear market, it would just be a period of time where we have aggressive downward price action, greater than around 20%, which lasts quite some time, right? An aggressive downward macro trend, okay? Whether that's going to be a 4-year cycle bear market or not, a whole different story. But when we're looking at the expectation, that could result in an aggressive downward trend, regardless of whether you want to call it a bear market or not. The reality is the price doesn't care what your definitions are. It is going to move in the direction of which the momentum suggests. So that is going to be our second danger sign, or our warning sign over here, and which is why these levels we're watching are of absolute significance, because they're going to determine which one of these scenarios play out. Are we going to see the pattern we have seen developing over the past 2 years, which is The price moves upwards, enters periods of consolidation, we see momentum drop, we retest the 44.62, we see the RSI break, and the price enters expansion. Are we going to see that same pattern play out for a third time, okay? Or are we going to see the price action fail to sustain above these major levels? And I've shown you these levels now on the 3-day chart, okay, now in the weekly chart as well. And if we fail to, well, the macro consequences are very dire for Bitcoin. We could see massive pullbacks. And this isn't only for the Bitcoin chart, okay? But if we look at the total altcoin market cap over here, we run the same risk. We lose this RSI low. We could see corrections back to 500 billion worst case scenario, okay? Or if we look at the total 3 market cap, again, if we lose the 44.62 and this uptrend, we could see corrections back to the 200 moving average around that 1.19 trillion, or this 1.9 trillion level, sorry, sub $2 trillion, which again would be devastating for the macro chart. So you can see here why this range here is so important. Now, the last 10 minutes we've been going on about, macro consequences, and I think it's important because the macro consequences are essentially the potential future directional moves Bitcoin could undergo. And if we blind ourselves to either or of these potentials, whether it be the upward move or the downward move, if we blind ourselves to the possibility of these moves, okay, when one of these moves play out that is against what we are locking ourselves into, we run the risk of acting late, not acting at all, or just being completely confused when it occurs to the point at which you are unable to act anyway, a deer in the headlights. So it is always good to be aware of all scenarios and throw your personal biases aside so you can act and make the best decisions possible at the time when you need to make those decisions, okay? Now, some people would say that that's not how you trade, blah, blah, blah. Well, the reality is that is how you trade, okay? Trading isn't about being a future fortune teller. It's not about knowing what is going to happen. It is about using historical data and real-time developing data to plan and prepare for potential future moves and then position yourself when either we get confirmation for those moves, foregoing a small percentage of profit as an insurance, or acting now in anticipation of a move you deem to be more probable based on the data available while taking slightly more risk. It is a risk-return trade-off. Every decision you make in trading has a degree of unavoidable risk. No matter how confident you are, it's got nothing to do with the outcome. Confidence is something you need to get rid of when trading. In fact, confidence is going to be an enemy because it creates an illusion of statistical probability. It creates an illusion that you are going to be more right than wrong, okay? It is not about being confident. It is about aligning yourself with what the data is suggestive of, regardless of your personal emotional biases and feelings towards that data. That is trading. So when we're looking at the short-term price action here, guys, at the moment we are in a horizontal range. We have to understand the context of the breakdowns and breakups, okay? Hence why we've written these words over here to contextualize that, okay? Now, applying context of direction to this, we are in a downtrend. We've talked about the 3-day chart. We're under all of those key levels. We've talked about the weekly chart. We've got negative momentum. So the overall expectation is that the trend will continue in the direction of which the trend has been moving until proven otherwise. And that's the message, right? The trend will continue until proven otherwise. When is it proven otherwise? Well, that is going to be the break above 89K, because that is when we shift bullish from the overall bearish trend we have been in. And if we do see the trend continue, we know that a trigger for a macro aggressive correction or for this trend to continue downwards is going to be the loss of 80K. So we've gone ahead and told you everything you need to know now about the high time frame charts from all angles. Okay, let's talk about the immediate price action. Let's jump into it. 1 hour chart to start off with. Okay, 1 hour chart. We have seen a pretty big correction as we have seen. We've come back and retested these lows. In fact, we bounced pretty high up in this range low here at these immediate prior lows at around 81.2, slightly under 81.2, 81.19. If we zoom into a smaller time frame here, guys, we can see a prior horizontal consolidation was developing before this recent drop back down into these regions. We had this horizontal high over here, and we can clone this and drop this under here to create that horizontal low. So we had a horizontal consolidation. Essentially what that means, we had short-term mean reversion into sideways consolidation, and this is essentially representative of indecision, right? When we have horizontal movements, it means the selling pressure and the buying pressure are more or less equal, or they are consolidating or decreasing. One of these levels breaks, it signifies that the sellers have taken control and the price action is more likely to move in the direction of which the horizontal low or horizontal high has broken. After that point in time, we have seen the price action retest a major level of liquidity, which is when buyers step back in. We have seen that exhaustion develop through the RSI, with the RSI rising upwards and the price action grinding slightly downwards. We have seen the price action see mean reversion back towards the 200 moving average. What we are watching here is game. 2 points of rejection, 200 moving average acting as a point of resistance, where we could see corrections develop back into these levels of change of character. Or number 2, we are watching for our prior horizontal high to yet again act as a future resistance. Remember, prior resistance becomes future resistance. Only upon the break of this, $83,984,000 level, are we then going to be expecting that short-term move to continue upwards, potentially could take us back to the range high. Until then, short-term expectations at best are rallies to 84, then corrections. At worst, corrections from the 200 moving average, and when we turn bullish, will be above 84,000. That is going to be it, guys. Thank you for tuning in. Have a fantastic rest of your day. Enjoy your weekend, and we'll see you on Sunday. Bye.